for our COBT listeners and viewers, it's Maynard, Mike, and Robbie with a really fascinating episode on critical minerals, mining, just everything that sits in that space. We wouldn't have tried it were it not for our fantastic friendship with Ashley Zumwalt-Forbes. We met her at a Kay Bailey Hutchison event at Texas. She was at the time at the Department of Energy. She was the Deputy Director for Batteries and Critical Minerals. As we've gotten to know her, she has a lot more history with mining and metals in her professional career. She's obviously left the Biden administration. She's living in Austin, Texas, sort of an independent expert around these matters, and probably going to be getting into a bunch of other things. We'll see. But Ashley, we're delighted to have you, particularly here in the office with us to talk about metals and mining and all that stuff.
Look, I'm really happy to be here. Thanks for having me, guys.
Well, we've been planning this one for a while, so we're super excited. And there's a lot of territory to cover. So this may be our first 4-hour episode, Mike. But, we're going to go full Joe Rogan on this minerals and mining issues. But what would you add in about the markets today, Mike?
Yeah, what I'd say with the markets today, the Dow's kind of going down a little bit. I mean, it's actually the volatility today is pretty subdued. I mean, so I think the biggest issue that we've been watching is we're in the thick of E&P earnings reporting here, and we've had, if you kind of contrast what's going on today and what happened maybe a couple weeks ago. A couple weeks ago, you heard from oil service companies and some E&Ps that, yeah, we're not really going to change our activity levels. We don't anticipate activity level changes, but guess what? These companies or these E&Ps are looking at all these different pricing scenarios for lower prices, and they may potentially cut, but they're not doing that right now. Fast forward to this week, and maybe even talking about last Friday, EOG stunned some people because they cut back on their CapEx in the Permian and in the Eagle Ford and some PRB, and then today you had Diamondback come out, Coterra come out, and they both cut CapEx spending for 2025. And so, like, really, obviously, what has happened over that time period is, oil prices have fallen $8 to $10 a barrel. So things have changed quite dramatically over the last 2 weeks. And so the interesting thing I thought today was, Diamondback put out basically a shareholder letter, and that really caught the attention of a lot of people. And so I'll just hit on 4 basic points here that they relayed that kind of set the tone. First of all, they said, today, geological headwinds outweigh the tailwinds provided by improvements in technology. Essentially, all these operational efficiencies we've seen over the last 3, 4, 5 years. Remember the last time oil prices went lower? Guys cut back on rig count, frac count, but production pretty much held in there. What they're pretty much saying is that if we see activity go lower, that's going to be a headwind. We're not going to see technology. We're not going to see efficiency gains. We're in a bottoming in the last innings of this, and I think that's pretty interesting. The second thing is said we are at a tipping point for U.S. oil production at current commodity prices. Third thing is we expect activity to slow and oil production to decline. And the last thing is, as a result of these activities, it is likely that U.S. onshore production has peaked and will begin to decline. When's the last time we heard that? We haven't heard that in quite a bit of time. The other thing we're seeing here is OPEC raised production by 400,000 barrels a day for June. They raised by 400,000 barrels a day in May. That's 800,000 barrels a day. Most people expected only 300,000 barrels a day. That's 500,000 barrels a day in excess of what people were thinking several months back, into a market that's already oversupplied. The question is, why is OPEC doing that? And I think a lot of that's just Saudi-led. If you think about it, they're talking about, hey, we want to go after cheaters. Okay, that's probably a good idea. But I think the second thing is, I do think that they realize that U.S. oil companies, U.S. shale companies are not going to be able to basically bring on production at lower prices. The efficiency gains are gone. And I think they see an opportunity to take back market share. Trump obviously wants lower oil prices. Trump is talking about inflation being lower. He needs inflation to be lower to basically have the Fed cut rates. And so I think all of this is coming together. It's all manifesting itself at this point in time. And so what does that mean for oil and gas companies? They're going to be cutting back on activities. That's not such a bad thing. It's not it's not about drill, baby, drill. It's about returns, baby, returns. And they are doing exactly what they're doing. And the funny thing about it is oil prices are up a couple bucks today. But some of these energy names are actually up as well on that Diamondback report. So interesting times right now. We'll see where things are, but it's just going to be a lot of volatility over the next 30, 60, 90 days.
I noticed Trump also commented here in the last day or so about, particularly on oil price, that it was useful to the Russia-Ukraine negotiations, because he just starts adding up Russia's pain, and one of them is now oil price to go with the war.
All of those are kind of manifesting themselves at the right time, I guess you could say, and I don't blame Saudi for trying to go take market share. They've lost market share over the last 2 years. If shale cannot basically produce in this environment, then they basically have a tailwind to basically push into this.
Not to put you on the spot, but where with oil price drop has the conversation shifted to on expectation for an interest rate cut? Has it changed on how soon that could happen? Because also the tariff thing is moderated slightly, perhaps?
I would say that basically, if you look at gasoline prices, they're going to be coming down. Oil prices have obviously come down. So there is less inflation pressure. The issue is that the Fed is looking at, okay, what is a tariff impact? What is that inflation impact going to be? And we just don't know that yet. And so my guess is when you see some of these deals happen, these tariff deals happen, when the economy looks like, we're going to have to see where the economy falls out. I mean, is it going to be worse? Is it going to be better? What does that mean in inflation? This is a good underlying, piece of inflation news. And so I think Trump, like you just said, I think his main priority is that he wants inflation lower because he needs the Fed to cut, because he needs to have lower rates to fund the deficits out there. And so I think a lot of people thought that when Trump got in office and you had Chris Wright and all these other guys, that they would be very, very bullish for the energy industry. And what we're seeing is right now, it's not so bullish. It could be bullish a couple of years down the road, but right now it's a headwind.
All right. Well, geez, Robbie, anything to add before we jump in with Ashley?
No, just really excited to learn more about technologies and mining and where the industry's headed. So,
Ashley, as we jump in with you, I was thinking this seems to be, there's so few areas where Republicans and Democrats agree.
Yes.
But on the issue of we're too dependent on foreign sourced metals and minerals, we're too dependent on processing of all those. This is a theme probably in the Trump one. It was a theme with Biden, and now it's a theme with Trump too. Is that fair from your perspective?
I think that's absolutely fair. And I think it is one of the only threads that has continued to bind.
Maybe
all the way
nuclear
through.
is the other one.
Maybe nuclear, yes.
Maybe nuclear.
Also geothermal.
Farm subsidies.
Yes.
That's
yes.
another one.
There are a few
there's
angles
handful.
here.
Well, even onshoring reshoring, semiconductor.
Yeah. Manufacturing, good jobs.
Manufacturing.
Everyone wants that, right?
Yeah, look at all this common ground we're finding.
Everyone wants these things, especially critical minerals, top of the list.
So how do you, when you think back to your time there at the DOE, what did you see as like your main goals? Because you were doing, I said critical minerals, but really also batteries largely. Maybe talk a little bit about what your job was, how you saw it.
Yes. So I came in with a actually very interesting and very specific mandate. So I joined January of 2024, specifically to deploy bipartisan infrastructure law and Inflation Reduction Act capital into the critical minerals and battery supply chain. Now, the definition around how that money can be deployed and into what was very specifically based on legislation. But think of anything that goes into a lithium-ion battery product, and those were things that we could invest in. The furthest upstream that I could go would be a concentrator, so couldn't actually invest in the mines themselves, but could invest in the infrastructure associated with it, and then flowing all the way through that line. So my mandate specifically was to try to make investments at strategic junctures of that supply chain, understanding that we don't have enough money to invest at every juncture of the supply chain. And so had to try to pick strategic points that if those pieces got stood up, private capital could fill in the interim. So there was a very large push in lithium, specifically lithium brines. We did two $225 million grants out in the Smackover. So SWA lithium, Standard Lithium, as well as TerraVolta. Also a really big push in manganese, and some of these intermediary products that you don't often get much airtime that are very important.
Can I just ask you, I think particularly those of us who are, oil and gas
Yep.
speakers, the lithium brine, that technology, where would you say, what's your observation on how far it's advanced and how much promise it has, and I don't know, anything you'd add on that flavor in particular?
Definitely. There are a tremendous number of groups focused on chasing either the brine resources themselves or, on the opposite side, direct lithium extraction technologies. I would say within those groups, there is, as with anything, a really wide range of maturity, connection to reality, ability to execute. We are very much at a tipping point today. So if you think of, Exxon has taken a very large position in the Smackover. You have groups like Standard Lithium that they've partnered with Equinor, they've partnered with Koch. They have, really good partners and are working to get their projects up. Right now, we're at that turning point. So I would describe certainly pre-2024 as DLE and lithium brines in the US as being quite nascent.
Is it happening anywhere else in the world?
South America. South America does quite a good job with lithium brines. Slightly different technologies. And so these are kind of first of a kind production facilities. We're going to start seeing those come online through the end of 2025 and into 2026.
And do those technologies, sorry to drill away on this
It's
one,
okay.
but is there a potential for a step change in the technology, or is this just how would you characterize refining the process and making it better? Is it because we're going to have a technology breakthrough, or is it because we're going to do it at enough scale that we wring the costs out of it?
Second piece, it is all about scale. Something that you saw coming out of the export bans that China has been putting in place is they've also put in place a ban on technology related to DLE extraction. And so oftentimes you'll see membranes coming out of China or solvents. And so a lot of being able to establish DLE operations here in today's environment is also going to be technologies that are not reliant on Chinese materials, Chinese technologies. We have to be able to do it here.
Well, so I sort of interrupted on the lithium
No, it's
brine, et
okay.
cetera, but what else would you tell us about even though you weren't investing in mining,
Yep.
that's where you were investing just downstream of that, just the probability that we bring a lot of mining back to the United States of any scale and by what flavor you'll tell us, but.
Yep. Mining is much like oil and gas in that you can't pick up resources and move them to where you wish they were. They are where they are, and you need to extract them in those countries. The US has some mining operations, and all credit to the Trump administration. They've now expedited, I think, 20 new mining projects, adding them quasi into the Fast 41 structure. So effectively helping them get through what is a very challenging permitting environment in the US.
And those projects, are you most advantaged if you're all on federal land, or where does a mining project have the best shot of happening?
In today's environment, it could be federal land, or it could be land that is in a state that really wants that development to go forward.
So who's a pro-mining state?
Best in class would be Nevada. You always see Nevada as being ranked as one of the very top mining jurisdictions.
Are there any states that would surprise us? Like, oh, I can't believe those guys are, who knew Illinois was so into mining? I mean, I'm just making it up. But
Look, I think it's much like oil and gas,
it's
where
the big Western open spaces.
exactly,
Yeah.
it's where the mining has been done historically. If they're comfortable with mining, generally they have a state framework for working with mining companies.
Do you think, this is a departure question, but how nuclear, for instance, if you look at some of the poll numbers, it's a more popular than it was 5 years ago.
Yep.
And I think the reason is people realize we need it, et cetera.
Yep.
Is mining experiencing a similar public support thing? Are people putting together, if I want all of these things that come with all of these metals and minerals, I need to embrace mining? It seems like that's lagging.
I think there's more awareness that we have to mine these materials. I would say we still very much have a not in my backyard mindset around where the mines are going to be. And so I really liked, I think it was Marco Rubio, last week said, America first doesn't have to mean America alone. And I think we really need to go into that mindset with our critical mineral supply chains. We need to also friendshore along with onshoring.
Friendshore is a great expression. You don't hear that one enough.
Yes. And it's so true within critical minerals. We quite simply cannot do this alone. We don't have the resources. We don't have the skill set. We've let all the IP leave the country.
Well, what'd you notice with the, along the lines of that last question, the environmental community, so to speak? That's another one where, for instance, a number of them are embracing nuclear now that didn't used to. How do they, what was your interaction with them around mining?
I would say, like any community, a broad swath of kind of takes on these things. I always really appreciate when people just have a productive stance, an ability to engage and actually define what the issues are so that you can come up with solutions. I think if it's just a blanket headline, mining's bad, that's not helpful. That's not helpful for anyone. But there are certainly groups that are more granular, and you can work with that.
The big, the companies that are mining here, or the U.S. mining companies, what would you say about when you thought about addressing those critical points in the value chain? Did you see it as, well, I'm most likely to address that by funding some startup, smaller people, or am I most likely to address that by helping bigger companies that already have capabilities take more risk in certain areas?
Yep. Going to be a little bit of a combination. So I saw my job as really buying down demand risk. So for any of these facilities to, quote, work against China, you have to build enormous scale to try to bring down unit costs to compete on a head-to-head basis. Now, generally, when you're building this enormous scale, you would hope that demand was already there for your material. That's not the case. So, these companies were having to kind of lean in, go out on a ledge and say, by the time this comes online in 2027 or 2028, I have to believe that the US is producing enough lithium-ion batteries to consume that material. And so I viewed myself as buying down that risk. Oftentimes, that's a risk that larger companies would be more comfortable with, have the balance sheets to support, can raise the capital, et cetera. I think the startup side of the equation is extremely important, but in a different way. Oftentimes, if you look at the Chinese supply chain and trying to set up something similar here, the most stark realization is we quite simply cannot set up the same supply chain and expect to win in any way. They have significant structural competitive advantages against manufacturing here in the US from a cost perspective. And so we have to do things differently. And oftentimes that's where you see the startups coming in.
I guess on that note, I was really curious because as you're thinking about reshoring or onshoring mining, we can't do it, as you mentioned, the same way. And, I think Jensen, when he was at the White House last week, was talking about, manufacturing isn't about low-cost labor anymore. Manufacturing is about technology. So how do you see, or what kind of technologies have you started to see that the U.S. can adopt, either from startups you're seeing or big companies that could actually decrease that, let's say, low cost advantage China might have, where with AI or robotics or whatnot, we may be able to even outcompete by applying technology in the space?
Yep. There are two areas that I really like technology within this space. One is within broadly the processing bucket. We use very antiquated methods for processing and refining critical minerals. Depends which critical mineral you're talking about, which process you're going through. But the example I always like to point to is China in Indonesia. So they were able to go into Indonesia, and there's a resource called nickel pig iron, which is historically considered a lower quality nickel. You could, quote, never make battery grade nickel out of it. The industry kind of brushed it off and kept moving. China doubled down, and effectively they've been able to rewire the nickel industry by converting a nickel hydroxide directly into a sulfate. So they don't have to go all the way through smelting and dissolve nickel briquettes into sulfuric acid. They have a direct conversion. And so whilst no one should try to emulate the Chinese track record of environmental stewardship in Indonesia, I do like the analogy from a standpoint of cost efficiency in coming up with a better way to process something that maybe we haven't looked at previously. You see a lot of examples of this. Oftentimes they're early stage, and oftentimes it's quite hard to get a pilot facility financed and up. But I think where you're seeing a lot of traction is in these defense critical minerals, where China has export bans in place. Groups that have modular solutions that can roll out today in a batch type capacity for these smaller niche markets, very low volume, they're very well positioned.
Yeah, maybe switching gears and going over to maybe copper, which is obviously a critical material. And I think Trump has designated an executive order as a critical material. And I think one of at least one copper company we talked to said, that's fantastic, it's awesome, but we needed to have this codified. What do you think about? I mean, we've got a big, beautiful bill coming, or whatever the case may be. What is the chance that we have something codified in that legislation denoting copper as a critical mineral? And if we get that, then this company and other companies in the U.S. can say, okay, you know what, we can now commit to a 2 or 3 year type build out, or whatever the case may be. What are your thoughts there?
Yeah, copper is one of these really interesting cases where it was always on the Department of Energy critical minerals list, but it wasn't on USGS. So the only reason that matters is to get the 45X 10% production tax credit, which obviously that's a hammer. And like when you're trying to make an investment decision, 10% could swing you wildly from a yes to a no back to a yes. And so fully get wanting to have this codified. I think there's every chance that in the big, beautiful bill coming up, we start to see a lot of these initiatives that maybe kind of seemed a bit random in some of the executive orders getting brought into actual structure of the law. I think it remains to be seen, though, what happens with 45X in reconciliation, as well as some of these other kind of demand support mechanisms. So there are real questions around the investment case. And I genuinely don't think we'll see major investment decisions in advance of reconciliation being completed.
So do you, when you think about this administration, certainly a lot of focus on the permitting question.
Yes.
And that came up certainly in the last administration, that the problems are not new.
Yep.
But I was thinking in the last administration with the IRA, there was a lot of focus on stimulus, grants, loans, things that would jumpstart the engine. This administration, see if you agree, feels like we're less focused on that. In fact, we may roll some of that back, but we're more focused on you want a permit, you can have it in 10 days or whatever the number is. How do you just, as a policy person, react to, can we solve the permitting problem? And in your space, how big of a problem is that? Are there select subsidies or grants or loans you'd love to see kept because they're really important? All of that.
Yes. Yes to every question.
Okay, well, that's the next question.
We're done.
No.
We're done. So we can go through that. On the permitting side, there is no doubt that it is an enormous problem here in the US. We need to be better at permitting, and I'm very happy that it has been such a focus in this administration. Permitting alone will not solve our problem. Quite simply will not. The problem is actually deeply rooted in unit economics and just the way we have structured these supply chains. So in China, you have fully vertically integrated supply chains. You have whoever owns the mine, owns the processing, owns the midstream, owns the downstream. The product flows all the way through the supply chain. You don't have to make a margin at every juncture of the supply chain. And in fact, you don't have to make a margin at all. It's more of a strategic market share capture play as opposed to traditional Western capitalism, you need to make money. So let's think about that in the lens of the US. Great, we are building mines. I think that's what, I'm in the mining business, so I think that's wonderful. Generally, the groups who own the mines are separate from the processors, are separate from the downstream. So we're chopping the supply chain up into these disparate pieces, saying each one of you has to make enough margin to attract capital, keep investors, and stay in business.
And when you say that, do you think of that as almost like an FTC type structuring, that if someone wanted to own the whole value chain, they couldn't?
They absolutely could. They absolutely could. I don't see it as a monopoly issue. I see it as traditionally in the West, we pick the thing that we're going to be really good at, and our capital providers want us to do that, as opposed to I'm gonna go buy a mine. Like, you think of Ford historically. When they started, they owned rubber plantations in Brazil. They don't today, right?
Another thing, we got into a conversation earlier this week about SpaceX.
Yes.
And the interesting thing that came up about SpaceX, and this is an unscientific comment, but the general philosophy seems to be whatever we're going to use or whatever we need, we're going to own it.
Yep.
And it's a very old school, like you said, Henry Ford, early 1900s, but this mentality, we've gotten away from this mentality a long time ago, as you said, often for financial reasons.
Yep.
So to leverage the example you said, is that Chinese company could do that entire vertical integration
Yes.
and not make a profit, and that was okay.
It's fine.
And so if you're competing at a global scale, and like at some point they could take every US company out of business because
Exactly.
they don't need the unit economics. And I think, because I follow you on LinkedIn, which is fun. And
Great.
so you had some interesting ideas around how like the US may be able to step in and still create a free market type structure, but then also protect against this case for critical minerals. What are some of your...
Well, I'm going to say this is, I mean, we're headed right into tariff country here.
We
right?
are.
This is
We
exactly
are.
the problem, right?
Yep. So I think this is an example of where targeted tariffs could be extremely beneficial. So if you take a very targeted approach to a nascent industry that we want to stand up, i.e. critical minerals, you can effectively apply those targeted tariffs to who the US believes are bad actors in the market, such that you artificially raise the market price in the US and allow a bit more breathing room for these nascent industries to try to get stood up and actually to become profitable. Because as you know, once you get to scale, you're able to bring down costs. I do not believe we will be able to bring down costs to the Chinese level with current technology, but it will be an effort over decades.
Can I ask you a question on this? Because you obviously had to think a lot about the US and its competition with China as part of all this.
Yes.
if you do what you just described, it's totally reasonable, right? So there's one problem with it though. It looks totally reasonable. And you're dealing with an unreasonable, like you have an adversary that is, I don't know exactly how to describe them, but they look at that and say, oh, these guys are really reasonable. And the other thing is they don't, if you were trying to exact some pain on them, you might do it in areas which are not critical, but which will, I'm trying to, because I think so many people right now are looking at the tariff strategy and going, I think I kind of agree with the objective. I don't think I agree with the tactics.
Right.
And I'm trying to just wonder, you've sat in those seats and debated these policies. Is there something to be said for unreasonable, broad-based, because you're trying to end in a reasonable place?
So a perfect example is tail end of Biden administration, USTR rolled out some Section 232 tariffs, which is the traditional lever for putting tariffs in place. And it was specifically targeting critical minerals. I think it was a 25% tariff on graphite. So graphite is one of the hardest areas for the US to try to compete. A lot of really sad stories of US companies trying to get up and just not. And so I believe the tariff was 25%. Almost immediately, what we saw China do was just cut market prices by 25%. And they said, okay, like if you guys want to do that, we will just sell at a discount and keep that market share. So it does point to potentially either extremely large targeted tariffs or potentially these perceived as unreasonable measures.
One question is that the menu is daunting. When you start thinking about what minerals and what metals, and this was fun. Rob West joined us as a senior advisor. So coming into today, we had a little email chain with Rob and you, and I was just watching you guys talking about these metals that no one's heard of, right? And so when you were attacking this, how did you prioritize? Like, we have huge ones like copper, and then we have exotic ones, and then you have everything in between. How did you prioritize, or what was your biggest focus?
So my job was a little easier in that, based on legislation, there were only certain metals that I could invest in. Okay. So a lot of these more exotic materials that we talk about, your rare earths, tungsten, antimony, like defense critical minerals, I couldn't touch. I really had no overlap with, because it wasn't the lithium-ion battery supply chain. And I think that was a big oversight. So in this administration, where the doors have been blown wide open, and we say, now we are looking at this from a national security perspective, we're shifting gears, it changes the focus and the lens of which materials it is we're looking at. And I think based on China's actions around export controls and export bans, it definitely changes the priority ranking.
A lesson I learned in the commodity business is, like, for example, oil. Oil is worth nothing. It's only worth what the products you get out of it. And the same can be said for copper and lithium. It's like the value is in the refined product, right? And so I look at this and say, we don't really need the product. We need the refining capacity to basically create that. So what is the willingness for the U.S. to say, what, just like we've spent tens and billions of dollars on basically these chip plants, we're going to do the same thing for this business. We're going to stand up these refining because it's a critical thing for the U.S. We're going to do it as a U.S. and eventually down the road, once we get this up and standing, we're going to go ahead and sell it or do whatever the case may be. It almost feels like we cannot defeat China on their own playing field because they own all the refining. It's not the metal they own the refining, so they own it. It's almost like a Rockefeller era is what they have.
100%. And this is my beef with the permitting only strategy. That's actually not the problem. It is the entire middle part of the supply chain, right? And I think you framed that very well. So appetite from a US perspective, I think it's mixed. I certainly think if you look at where reconciliation is headed, The additional capital is going to the Department of Defense, which means you can read into that it will be the defense critical minerals where refining and processing is very much a choke point. I genuinely don't think the US is going to go all the way to fully running processing directly. I do think there is a very strong appetite for specifically Department of Defense to roll out blended finance products for the private sector to come and build those facilities. Here's the catch though, is once we've refined it, we have to have someone outside of China to buy it, to make the thing out of it, right? In the case of rare earths, okay, great. We established separation and metallization. We don't have that here today, so that's like a real win. But then what are you gonna do with that metal? Only China makes permanent magnets outside of a few instances. And so you're in a situation where the middle of the supply chain is the choke point, but it's reliant on having downstream. And so that's where you see conversations around government stockpiling start coming in. During the Cold War, our stockpiles were worth $50 billion. Today, they're worth $800 million because we sold off all of our materials in the 90s and early 2000s to finance government deficits.
And what were those, just so we all remember?
Sorry, what were the stockpiles?
Yeah, what did we have? What were we stockpiling?
Basically, the things we're here talking about today, Mayor.
Like the whole value, like mini.
It would be traditionally the Department of Defense stockpiles. They're very specific to the materials needed to feed into the things the DoD needs.
So rare earths and nickel, something that's basic as nickel or copper? No?
It would have been like metallized rare earths. It would have been antimony in the form that goes into the weapons supply chain. It would have been tungsten for bullets. It would have these are the things that we would have huge stockpiles of. Like that's why we won World War II, right? Was being able to supply the Allied industrial base with the materials needed to fight the war. We don't have that.
So with that,
I know.
that was a big one.
I'm such a positive person, and it's so gloomy.
So I want to switch things, but keep it still on topic a little bit. But we've been hearing a lot about deep sea mining and deposits and whatnot. What are your thoughts? Is that a viable source?
Yeah.
Is that how do you think about that?
I'm going to give you a non-answer. So
Okay.
it's deep
We've been
sea.
warned.
I know.
A non-answer is coming.
You've been warned. I kind of put it in the bucket of this permitting thing. Is great. I will be so happy if it works. If we bring more metal into the supply chain, great. But that's not actually the problem, right? We should not bury our head in the sand and say, if we just throw all of these new resources at the wall, we're done. We have fixed the supply chain. We haven't. Maybe we've made the supply chain less competitive, in fact, because we've brought more metal into the market, driven down market prices, so it makes it less attractive for groups to invest.
So it may be we should be focusing on manufacturing, reshoring manufacturing capability.
Exactly what we should be focused on.
But isn't it the case that if I was considering an investment in the manufacturing, the downstream piece of it, knowing that I had sources of supply which the U.S., quote, U.S. and friends have better access to, that has to make me feel a little more comfortable about my midstream investment.
Absolutely. Yes, absolutely.
So the other one, Ashley, that's in the news is this joint venture, if you will, with Ukraine.
Yes.
How do you, that's a real complex issue.
It is.
Some people try to attribute that to us recouping some of our investment in the country.
Yep.
/ somehow us committing to them in something which is sort of a subtle but not direct alliance. How do you view the value of that?
Yes. So I think the value to Ukraine is actually quite high in that this was a sign of support from the US. I think it has some strong language against Russia in the actual agreement. If I was Ukraine, I'd probably be happy with where things shook out. They didn't get security guarantees, but the US kind of marrying themselves to this fund that goes into the rehabilitation of Ukraine through energy and mining resources, I think like anyone could interpret that as good for that country. What does the US get out of it? Again, like pointing back to permitting in deep sea mining, getting more resources into the market isn't actually the problem. I layer on top of that a multitude of challenges with Ukraine. Geopolitical risk through the roof. Many of the resources, and I say resources quite lightly because this is all very early stage in country, but they're in areas that are still occupied by Russia, might continue to be occupied by Russia. You know, no one is really going to be going in and trying to explore in those areas. Secondly, explorers are really challenged at attracting capital in jurisdictions like the US, Canada, Australia. You layer on all the complications associated with Ukraine, I think you get to a standpoint very quickly where I don't think private industry is going to invest in doing any exploration there, certainly not in the near term. So I've kind of said, you know, best case scenario is something happens a decade from now. The challenge is really today, not a decade from now.
Is that a bit of a blueprint for doing things with other countries? Is there some larger context in which these things might be useful or impactful?
Yeah, I like that framing. Is, you know, we spend a lot of time talking about China's effectiveness through the Belt and Road Initiative and striking deals with countries, really using diplomacy and financial support to secure access to resources. You could look at the Ukraine deal as a parallel to that strategy. I think it's different in a number of ways. But certainly it does open up kind of a new chapter in American foreign policy.
I guess the real question for me is like, are there even critical minerals there? Because we heard about Greenland. We need Greenland because there's all these, and people are like, well, there's no real critical minerals. It almost feels like this deal is more of us being able to get in there and rebuild the country as opposed to just extracting minerals. What is your thought about this geology and stuff of that? Is it there?
So the last geologic data that we have is from Soviet era. So honestly, we have no idea. The information we have today, there's some lithium, there's some titanium, not much of other things. I think in the deal, there are 55 minerals that are included, including oil and gas, which might be like nearer term commercialization. It won't solve the rare earth crisis. And people always couch Ukraine with rare earths. I think that is a definite no. Yeah.
What are your thoughts on the manufacturing front? Because I find that like super fascinating. Yes. Manufacturing is coupling to mining.
Yes.
How do we fix that in the US, like from a policy or government perspective?
Yeah. Look, I do think, like, in trying to reestablish many of these capabilities in the US, we have to be able to protect these companies economically for a period of time, which is where you see targeted tariffs. Now, we've talked about where that might not happen against or it might not be effective against unreasonable counterparties, but you need to be able to protect and support these initiatives. I think other helpful initiatives would be abilities to bring down upfront CapEx, i.e. grants or cheap loans. You could have tax incentives to try to make these operations more profitable, but make no mistake, like the challenge with bringing manufacturing back today is the ability to make money and attract capital. I think the second biggest thing that is glaring, and we all like to ignore it, but who is going to be working in these facilities? These aren't going to be just run-of-the-mill manufacturing jobs. They require very specific high-skilled labor, which takes time to develop, takes time to train, you know, and we have completely let that skill set leave.
This may be a place where like advanced technology, some of these
Exactly.
robotics
Yep.
and AI and whatnot,
Yes.
like this is a critical skills gap.
It is critical skills.
You also mentioned friendshoring.
Yes.
And this does, and I feel like for a while in some of our episodes, we had noticed, developing countries that had metals, minerals,
Yep.
resources, wanting to capture more of the value add
Yep.
and do the quote processing there before they
Yep.
exported it. Is that a trend or an avenue you're excited about? That we
Yep.
put more of this processing technology in friendlier places?
So it's definitely still a thematic. I think, and I also think it's natural for countries with these mineral endowments to want to climb that beneficiation curve, have higher value add products, have more jobs for citizens. Makes sense. I would want the same thing for my country. So, you know, good on ya. I think the question always goes back to, does it make sense for the processing to be nearer the mine site or nearer end industry? And there is not a one-size-fits-all answer, to be clear. Oftentimes people point to one of the 1,000 reasons that China has dominated rare earths is that they did processing directly next to end users. So they were able to iterate really quickly around what makes a good permanent magnet and how to beat everyone else.
Like change the formula, tweaking it.
Exactly. And so I actually quite like that argument. Oftentimes the things that are, the product coming out of processing is water soluble. I think that's also a really good example of maybe where you don't want to be shipping it across the world. You might want it to be nearer the end facility. There are other instances where it might make sense for it to be done near the mine site and have lower volumes that are shipped around the world.
So one question, this is a slight twist on things here, but I think so you have a new administration in Burgum and Chris Wright, you have a new philosophy. Some is very similar, but really a new philosophy driving energy policy. Where do you think and Robbie mentioned you're very active on LinkedIn.
I'm very active.
But you post, people should follow you. You post a lot of great thoughts. Where do you think the decarbonization, I guess we've been talking about, this is the new world of energy, pragmatism, national security is so important. We have a weaker or a challenged global economy. Where do you think the decarbonization community is going to settle out in terms of what their proposed solutions are?
Yes. So back in 2017, I was at Black Mountain and we were starting a nickel mining business in Australia. I had moved to Perth, and we were trying to raise money. And so we were going around to funds that traditionally invested in end products within the lithium-ion battery supply chain and preaching the gospel of you guys need nickel and we're here to be that answer, right? All across the board, people would say we don't invest, in that part of the supply chain. Our LPs don't support it. It's considered dirty, but they are takers of the material. And I hate that stance. I think it's just burying your head in the sand. Because if you're not involved in that segment of the supply chain, you have no ability to influence it, right? You can't make it better if you're just ignoring it. I do believe things have changed a lot since 2017. Tesla was still the most shorted stock in the world or something. It was a very different world in 2017. There's a lot more awareness that things have to come from somewhere, generally out of the ground, in order to make end products. And you're starting to see capital allocators play across the value chain, which I love. I think that's ultimately where we'll see decarbonization groups shake out as well. I often see funds that are focused specifically on decarb really looking hard at the technology space. Like, how can we do this better? But importantly, with a focus on how can we also make money? I think that's like a very important shift that has to occur in industry. You have to do well while doing good. And I am very hopeful that we're really seeing those changing tides. Mining doesn't have to be bad.
Is there one on money? Did you interact with a lot of, quote, investors in the mining value chain? And
Yes.
what would you tell us about their orientation,
Yes.
how deep the pockets were,
Yeah.
what the niches were, like how much capital is out there to do mining?
Mining is not oil and gas. It is hard out there to try to raise money for the mining business. Look, historically, we've seen some quite bad times during the mining business, a lot of capital destruction. And so people get very nervous when you start talking about mining. It's a much longer, much later dated risk profile than oil and gas, where it's more upfront. Mining, it could take a decade to figure out if you're going to make money or not. There's an adage that the third owner of a mine is the one who's actually going to make money. The first two are going to go bankrupt. And it kind of holds, right? And so whilst these are jokes and adages, it is rooted in truth, in that it is extremely hard to raise money for explorers, for developers. Even once you're in production and you have quite skinny margins and skinny working capital, like if one thing goes wrong, you're all of a sudden on death's door, makes it really hard to function.
Would you also bump into pensions and endowments? It sounds like you maybe did with your Black Mountain experience, but pensions and endowments that said, we're just not going to put money in that because it's, quote, dirty, or whatever they would say. You would hit that.
Exactly. Whether it's dirty, whether it's not the risk profile they're looking for, whether they have a specific mining carve out for LPs where they're not allowed to touch it. Like, there is just a laundry list of reasons why people don't get involved. Also, unlike oil, that is large liquid markets, globally traded, well understood, that's not the case broadly in critical minerals. So it's hard for people to get their heads around.
Would you bump into the big global trading houses as part of this, and did they have any perspective you found useful?
They do a great job. Look, I have so much respect for the trading houses because they are really the folks with the balance sheets and the understanding to get in and structure deals to actually kind of get projects up. Now, make no mistake, they take their economic share and make plenty of money within the project. But if I look at kind of the suite of options, you have a select few private equity groups that are focused on mining. You have the trading houses that has a tremendous amount of capital. And then you have the majors, which are much smaller than the oil and gas majors. So they have much smaller balance sheets. You don't have a ton of options.
Do you find it interesting that here's a part of the world where almost no one would say this isn't going to grow massively?
Yeah.
So here you have this space with lots of, you don't know how much, but it's clearly a big growth area. It seems to have it's under-discussed, under-invested in, underappreciated, just under in a space that is maybe one of the most exciting, if you will, that there is.
Selfishly, I agree. I love it. I do think we see tides beginning to turn, or at least the first step is awareness that these materials are important for the growth of the world, not just decarb or not just energy transition. There's also broad awareness around, China controls these supply chains, and we need to be able to stand on our own 2 feet alongside friends and be able to make these goods. I think there's growing awareness. I don't think the tide has turned. Ultimately, what makes the world go round? Money. I think once we start to see a situation where there's either a scarcity premium, like we quite simply cannot get XYZ rare earth or, what have you, and there's a ton of money to be made, everybody becomes a critical mineral expert then, and we all pile in and we're all in the boat together. I think until that happens, it's going to be a lot of it's hard work. You're knife and forking your way through these transactions, trying to get things stood up and trying to make sense of it in the West.
Well, if you imagine a world, let's say, where China starts playing by the rules better, tariffs, whatnot.
Okay.
Does this then become very attractive for investors like oil and gas, where there's real money to be made if there wasn't structurally, this actor that's dominated and had unfair trade practices for decades?
Look, I think the reality is China is not a capitalist society. They don't have to make money. And so trying to attack, what is it, art of war, trying to attack a monopoly when they're on the hill and you're at the bottom, when they don't need to make money and you do, there are all these angles around, we cannot do this, the private sector alone. It's not going to work. And so there does have to be government structure. As much as I hate it, I'm a free markets person as much as I went to Harvard Business School. I love the free market, right? It's not going to work here. We have to structure solutions in order to reshore some of these industries, at least in the near term, so that they can compete in the long term.
How do you think, Ashley, we've talked about this a little bit, but you've had a really interesting career in the private sector. Did this stint with government.
My GovGal
You did
year.
the GovGal year.
Yes.
And here you are, with all this knowledge and all this interest,
Yes.
and you've relocated to Austin and thinking about next steps. How do you see the mining world in terms of opportunity and fun things to explore? And we want to do more things with you, but what things might you get up to in the next few years?
Oh man. So I've described what I like doing the last few years as weird and wonderful transactions. I think there's no better way to add value in the mining space. There's no better way to just have fun and have that intellectual curiosity scratched. So on my side, it's very unlikely that you see me get involved with a large mining group that has a focus on broad, globally traded commodities. I like the hard stuff, for better or for worse. These really niche markets that require a bit of structuring. I'm fascinated with the things that you've heard me talk about here today, your rare earths, your defense critical minerals that nobody cares about, nobody thinks about until we can't get them. Also love something else you heard me talk about here today, processing technologies. I think there is a ton of money to be made for the folks who can de-risk their technology the quickest. It doesn't actually have to be the best technology. I think it just has to be the one that is standing there as the solution to the Western world. You've got it. I love batch applications, love modular applications, and I like putting capital to work. So the combination of those things I just outlined.
Did you see in your role, it's hard to let you go, actually. Did you see in your role, there are big industrial companies that aren't going to go into the business of processing metals and minerals and all that, but they're going to build the equipment that helps you do that. Did you see them getting, those big industrial conglomerates getting more interested in what you just said, hey, I got a technology that works and you guys can use it, and gearing up to sell more to the mining industry?
I think there's generally just a layer of skepticism when it comes to new technology across the mining value chain, even if that is processing, which is a little bit disconnected. I think people have a view of you really got to prove it to me first. So honestly, I don't feel a tremendous amount of excitement at really any
Around mining
juncture
tech.
of the supply chain. Yeah, it's hard. It's hard to raise
That was
money.
gonna be my question is,
Yeah.
if you're sitting with us 12, 18 months from now, like,
What's changed?
what are you optimistic on? What's changed? What do you think, where in reality do you think we can make some progress, either,
Yep.
just from a permitting standpoint, political standpoint, or just, what do you think?
Hey, I think come July, we will have a whole different landscape because we will know what is in reconciliation. And honestly, like, if we are asking companies to underwrite projects that have 30-year lives, we need to be able to give them some certainty on like what the levers are. I think getting through reconciliation is the number one most important thing politicians can be focused on today, and then giving us policy stability. Stop changing it. Don't repeal it. Don't put other things in place. Let the rules of the road be. I would also say I really expect to see quite a bit of progress on Department of Defense, like almost wartime measures around modular refining of some of these very niche materials like heavy rare earths. Yeah, I would say those are my two best bets for how things will change. You'll see permitting get greenlit. Like, I hope we are seeing Resolution Copper Mine getting built because those guys have been waiting a long time. Twin Metals, similar story.
Can I ask you one last question?
Yeah.
So, when we sit and talk like this, and you think about the U.S.-China competition, the national security implications, the volumes, the locations of these things, it all makes sense, right? And nothing is more illustrative of that the Biden administration and the Trump administration kind of saw a lot of these things similarly.
Yep.
Like, that's the best commercial, that there's something pretty understandable here.
Yeah.
So why is there never a good Oval Office speech that says, my fellow Americans, these are the numbers. Like, this is the volume. This is what we need. This is the issue. The Chinese do not make money. Like, why? And we had the same question around why didn't Biden lay out the IRA in the same way?
Right.
It seems like these things are not so complicated that they couldn't be explained in a way where then you get more public buy-in to making a lot of change, doing a lot of these things. I'm just curious, you were there.
Yeah.
That's the way you do it in corporate America. You have a town hall or investor day or something.
Yes.
We seem to have lost that culture.
There are a lot of things that I could say about my year in government. I think the best response to this is, in the private sector, you have profit as the unifying force. And like, at least people conceptually understand that that's where they're trying to head, right? Like, makes sense. You have like, common enemy, common goal, something. Government, you don't have that. So it means everyone has different fiefdoms, and they believe that they're doing the right thing, but they're headed in disparate directions.
Do you think there's almost a lack of desire to do that? Because, then you're kind of telling everybody what you're doing. Like, it's almost too much information, and you'd rather not lay out the vision.
I think that's almost too generous, and that it's like a conscious decision that it's not happening. I genuinely think it's like a prioritization issue around, there are so many things
Like,
to get
that's number
done.
37 on the
Exactly.
list.
Exactly.
Interesting.
I believe it's the most important national security issue facing America. Others have different views.
Well, actually, this has been awesome. We clearly could have gone on and on, but we knew this would be fantastic. There's more. We need a second episode. There's more to cover, but we're
Oh, yes.
Yeah, after
yes,
July.
I'll have my baby. We'll have reconciliation. It'll be great.
It's fantastic. So much is coming. Thank you. Well, we look forward to
you.
doing more things with you. Thank you,
Yes,
Ashley.
this was really fun, guys. Thanks for having me.
Awesome. Thanks, everybody.